Hi, everyone. Jason from Hedge Plus with the weekly look at the livestock markets. We'll start with cattle. There was a big bang there a couple days ago. I think the limit that losses in feeder cattle and live cattle down $5 or $6 that day look like the revision on past jobs report, something that always comes out. Usually it's healthcare, the government jobs. It's not going to be a big deal yet, but you see how that market's going to react to any concerns that the economy is weakening or not as strong as thought. When you have record high beef prices, you need the consumer to keep being able to afford it. So far, there hasn't been much concern, but you see chinks in the armor like that. Also, we've seen cash markets potentially weaken a little bit in the north. The south, we don't know where that's at yet this week. That'd be a big indication if the cash market starts to come down. The belief is packer margins still very profitable. So that's, they can bid up, to make sure supplies are coming in. So not a lot of reason to expect that's over with yet. But we're watching the cutout value slide pretty good and down to the low $400 area, almost, $10, $15, $20 lower than a week ago. So some signs, but quick rebound right away after the big down day a few days ago. Now, do we see selling come in on these rallies? Are buyers just getting exhausted? Are people looking to make sure they sell at these prices to not miss anything? I think the best thing we can do, most affordable thing we can do, like I've been saying, just get put options bought under the market. It's historic rallies like this. You know how they end. It's just, it can't stay up this high forever. Something's got to give. Eventually it takes time with cattle, but you kind of rebuild the supplies. High prices encourage things to shift. So you rebuild the supplies, the pipeline, until we see Mexico imports come in again or tariffs with Brazil cut down. Still some risk. So that probably keeps us in good shape with how high these prices need to stay right now, while tight supplies are still a concern. So I don't know that it's over yet, but just that's why I've been saying make sure you got put options bought. You just don't know when the rug gets pulled. The hog market, December, I've been saying I think we go above 90. We broke out a consolidation yesterday to the top side. We're within a $1.50 of 90. I think you push above that. I'm waiting on doing any sales or hedging because I think it just kind of keeps creeping higher with the cash index $10 above futures right now or so. And then the cutout value still staying pretty strong. Yesterday's export sales report was kind of on the weaker side, but the trade seemed to like that China was the biggest buyer. We got to keep that coming. So I think hogs push a little bit more over 90. That's, again, just gets to be a heck of a price. Let's make sure we're, taking advantage with some sales here and there. Hope you have a good rest of the week. We'll talk to you soon. Thanks.